I'm Laura Valestin, and this is PwC's Tax Insights in Brief. On February 25th, Treasury and the IRS issued Notice 2026-17, which provides that they plan to issue proposed regulations that are intended to simplify, clarify, and refine the 2024 final regulations to reduce compliance burdens and limit their impact on ordinary course transactions. The forthcoming proposed regulations would permit taxpayers to elect a new additional method to compute a Section 987 Qualified Business Units, or QBUs, taxable income or loss, and related foreign currency gain or loss. Taxpayers may only elect to use this new equity and basis pool method for years that the current rate election is in effect. The elective equity and basis pool method is modeled on the 1991 proposed regulations and uses an annual remittance computation rather than daily netting. It can also be used in conjunction with the recurring transfer group election to translate certain transfers at the average rate for the year. The notice also proposes to narrow when loss suspension applies by providing new de minimis thresholds, simplify recognition groupings using a single grouping for most owners and 4 buckets for CFC owners, and slightly expand the Section 987 hedging transaction definition to cover certain hedges even without GAAP net investment hedge treatment. Importantly, additional guidance is also expected to address an election to exclude CFCs from the requirement to compute or recognize Section 987 gain or loss, except in connection with certain inbound transactions. The rules in the notice are expected to be consistent with the rules in the forthcoming proposed regulations and may be relied on except the rules with respect to the CFC election. Reliance is permitted for a tax year ending before the proposed regulations are published and to which final Section 987 regulations apply. Please note that companies will need to transition their CFC's Section 987 QBUs as the CFC election is intended to apply after transitioning to the 2024 final regulations. Companies should begin to evaluate the impact of the equity and basis pool election and the CFC election, as well as the impact of the simplified loss suspension rules and the recognition rules on foreign tax credits. For financial reporting purposes, the notice presents new information that companies should assess and account for within the period in which the new guidance was released. Companies should also consider providing comments on the notice, which are due by April 26, 2026. For more details, read the attached insight. Thanks for watching. This has been PwC's Tax Insights in Brief.